On the day that the UK voted to break away from the European Union in June last year, sterling tumbled around 12% against the dollar, from 150 down to 132. Since then, it's gone into its latest channel between about 120 and 127. If we take a look at where we are in terms of the range-bound pattern that we've had recently, that was the big drop that we saw last June. And here we are now at 125.82. But we're speaking now to Ron William from RWA, who is targeting 115. Ron, welcome.
Hi there, great to be back.
Look, it's really good to speak to you again, because at this time we are awaiting the signature to go on the final document to trigger the process to exit the EU. We're not quite there yet, but we do know that when it happens, the world's not going to fall apart immediately, but things could develop over a period of time. Your call at 115, just talk us through some of the charts that you brought along.
Well, this has been a call that we've spoken about for some time now, pre-Brexit and post-Brexit. And remember, a lot of the signs of further bearish moves, certainly on the sterling, were already seen in the charts. And this is why looking at the charts can provide a real good lead indicator to some of these big events. Now, our first chart is on the intraday basis, just showing when the announcement actually was given that the trigger date was scheduled for the end of this month, just days from the interview that we're having today. And we had a little bit of the sell on the rumor, buy and potential buy on the fact.
Let me just clarify this. This chart here is, these are 1 minute candles.
Yes.
And this is a one-day event.
Yes, so it's a 1 minute intraday line chart, and it's just showing that we are in an uptrend. The trend actually will tell you a lot as to how the market will react to the news event itself.
And this was a day that Theresa May got up and said that this is the day that we're going to go for to trigger.
Exactly. Yeah. So just very recently, just in recent days. And it was on that day that we had a minor sell-off, but still a sharp reaction of about just under 1%. And so people were reacting to that, to the news. Shortly afterwards, we had a relief rally. And what I'm showing here is that there are key downside trigger levels that we need to be watching ahead of this, the actual execution of Article 50, and that is the intraday high, previous intraday high at 124.40, and then more important than that is 123.60, which is a risk level I've penciled out there from the price lows of that day. But also from a price distribution indicator I use just to show you where the real activity is in the market. And that just shows it's a real tipping point for cable on an intraday basis. That would also suggest that more selling pressure is likely to come to the market and maybe have a runaway downside projection over the next few sessions.
Let's go back to the long-term picture and take your second chart, because here you start off with that Brexit vote back in June that we saw. We saw that big drop in sterling. So if we could bring up your chart that you call Bermuda Triangle. Explain what's going on here.
Yes, well, it's just a pertinent phrase which I tend to use whenever the market's going sideways in a compressed triangular-shaped pattern. So technical analysts might call it a variation of other terms, but I call it Bermuda Triangle because it says what it means. It means what it says, which is that we're likely to get lost in this pattern if we trade it, because there's a lot of two-way volatility. It's very difficult to predict which way the market will go. Unless you're a swing trader and very successful at being a swing trader, it's very difficult to actually make money in that kind of environment. And at the moment, the Bermuda Triangle only becomes profitable once it breaks. The probabilities suggest that we break to the downside below 121, which is the bottom line side of that triangle, and that would be a continuation of the trend which has been down since Brexit, June 24th.
Why do you say on this chart that there is a tendency potentially for it to drop rather than to rise back up to 128.70, for example?
Well, there are no certainties. I mean, it can flip either way, and perhaps in cable's case, because it's been bottoming out for so long, the higher probabilities is in line with the trend, and the trend has been down. That's the first point. So it's the trend following analysis that we're keeping. The second thing is that there's still a downside projection on the chart that we'll look at in a moment, which suggests 115. So this is the target which I've been showing from previous interviews. Other than that, it's just the market tendency at the moment. We've had more sharper corrections than we have had rallies. And so it's just that the market structure at the moment is looking a little bit vulnerable. The other thing is, if we look at all Brexit-related announcements, they've tended overall to be negative for the market. So from a sentiment perspective, there's a lot of asymmetric risk built in at the moment.
Before we move on to your third chart, I want to take a look, if we can, back at this, because if we can bring us up again, you've got here minimum price objective, 860 pips, 6.6%. Now, you've drawn that big red arrow there in the middle at the bottom. Where does it relate to where we're going? Where should we use that as a projection point from when we release ourselves from this triangle?
Well, there are different ways of doing this, and it depends sometimes on the analyst or the trader in terms of how optimistic or pessimistic they are. But generally, as a rule of thumb, you would make the projection from the breakout price and time area. But what it does suggest is a move much lower in a magnitude of 860 pips or 6 and a bit percent, almost 7%, and that would take us down to 115, depending on where you projected it from. Now, the flip side of that, just in case we're wrong and the market actually powers up and we get a surprise move to the upside, is a move above 126.50, which is a key level I put, which is the top side of the triangle, I should say. 128.70, which is the two parallel lines in black there, which just shows you resistance, support, which is now resistance, and then as a target 130.150. But that's if and when we break 128.70. The near-term resistance is at actually 124.80. We're trading above that, but we would need to hold above that, and then the three other price levels I mentioned before we even contemplate a bullish scenario.
Yeah. If you're taking a short trade on this, where would you put your stop?
At the pattern ceiling at 126.50, depending on my risk-reward ratio.
Right, yeah.
But to be honest, with this type of trade, this could be a profitable trade on the downside if it does break down lower. So we could follow that strategy.
Yeah. Good. Okay. You referred to that 115 level. Let's take your third chart, where you, as you said, we've spoken about this chart before, haven't we?
Yes, we have. And this is, I tried to quieten down the chart because it was a bit noisy last time we looked at it, and just to show that. Well, a few things here. One, it's a chart which we don't see that often. It's a chart going back to the 1985. We'll all talk about major historical levels on cable, 31-year lows, but how often have we actually seen what that low was? And it was in 1985. It was around the parity level. I'm not suggesting that we're going anywhere near that, but it's a great way to actually see why we had the break in the first place. And it's that 30-year support level around 138 and a bit, which we broke into Brexit, and that suggested further asymmetric risk. So that's the first point, that major support level breakdown. But the second point, and this is the reason why there's a price projection from my side into 115, if we look at the major historical price swings, and you can see there the big arrows I've drawn showing you the historical price swings, the average is 21%. So if we project that from the Brexit high of June 24th, that equates to approximately 115. But also if you just use the MPO target, the minimum price objective from that triangle pattern, it also ties in with the same level. Now I've also put in a support level there from the 1985 low, a GAN structural trend level. All of these different price projections come in for a confluence area at 115. And one final thing is keep in mind the price and time information here. There is an 8-year cycle that has been in play on every major bottom. So although we might see further downside on cable, the 8-year cycle is suggesting that a new low will be the bottom in cable, and it's an interesting thing to keep in mind going ahead.
Okay, all right, Ron, thanks indeed for joining us. Ron William from RWA with a look there at the chart of cable since that Brexit vote back in June last year, and the price target there for Ron, 115.